Right. So we are discussing the chapter of the insurance companies. We had our general discussion regarding the insurance company. Then we came to the audit of the general insurance company, and now talking about the audit of the life insurance company. In life insurance company, one point of our discussion was regarding the types of the life insurance products which could be there. And then we have a lot of other questions to be discussed, like the actuarial process. What is the importance of actuary and what is the role of the auditor in case of the life insurance company, right? Then after that, we also had the question regarding the underwriting in the life insurance company, right? Then after the underwriting, we also have a question over there regarding the reinsurance. Then another question which we saw is regarding the free look cancellation, that the policy holder within 15 days of the receipt of the policy documents, he has an option to return the policy. The only reason for not returning the policy is going to be not satisfied with the terms and conditions of the policy. And of each of these answers, what we need to know: meaning and verification. Meaning and verification. Okay, right. So now coming to our next discussion over there, which is regarding the policy lapse and the revival, right? Policy lapse and the reviver. Then we also have a discussion regarding the policy surrender, right? Then we also have a discussion regarding the policy surrender, right? Then the discussion regarding the premium collection, accounting and the reconciliation. Then also a discussion regarding the claims, right? The claims being paid by the life insurance company. And then a discussion regarding the investments of the life insurance company, and also regarding the commission payable to the agents of the life insurance company, right? So likewise, 1, 2, 3, 4, 5, 6, 7, 8, and 9 and 10, right? These are the 10 points for which we prepared a list, right? Out of these 10 points, have we already discussed the first few points over there? The actuarial process, the underwriting, the reinsurance, and the free look cancellation. So now let us look into the policy lapse and the revival. Okay, right? So policy lapse, that means what? There is a due date within which you need to pay the premium on the policy, right? Say you've taken an annual policy and you need to pay the premium on the policy on or before the due date. But say you did not pay the premium on the policy on the due date, right? So you did not pay the premium on the policy. Say the due date of the policy was 30th of September and you did not pay the premium on 30th of September. Then what does it say? Insurance company gives you a grace period. Grace period of how many days? 15 days to 30 days. That is by 15th October or by 30th October, you to pay the premium on the policy. If it is paid within the grace period also, it is deemed to be paid within the due date. If it is paid within the grace period also, it is considered to be paid within the due date. But say it has not been paid within the grace period also. So it was not paid on the due date. It has not been paid within the grace period also. Then in that case, what will happen is the policy lapse. And then all of a sudden in the month of November, you remember, oh, I applied for a policy and then I forgot to pay the premium. And now I need to pay the premium on that policy. So now you need to apply to the insurance company for the revival of the policy. So you'll have to send a revival request to the insurance company that please do the revival of the policy. Right? So that is policy lapse and the revival. Are you understanding the concept of the policy lapse? If the payment of the premium on the policy has not been paid on or before the due date, then it says, okay, insurance company will give you the grace period within 15 to 30 days after the due date. Also, if it is paid, it will be considered to be paid within the due date only. But say you don't pay within the grace period also, then it will be considered to be a policy lapse. And then whenever later on the policy holder remembers about the policy, or he has the money to pay the premium and then he pays the amount of the premium of the policy, then again the policy will be revived. So that is called as the policy revival. Are you understanding that, everyone? Right. So lapse is the discontinuance of the policy only due to the non-payment of the premium dues, right? When you don't pay it, you don't pay on the due date. In order to keep a life policy life insurance policy in force, the policy holder is required to pay the premium when they are due. If the payment is missed, the insurer is allowed a 15 to 30 days of the grace period. So you have to pay it on the due date. If you don't pay it on the due date, then you have to pay it within 15 to 30 days, which is the grace period. If the policy holder does not make the payment within the grace period also, then the policy gets lapsed. Thus, a payment made within the grace period is deemed to be a payment on the due date, right? So is this question already asked in your exams? Yes. And can they also make some case study on this one? Yes. Right, so pay on the due date. If not due date, pay within the grace period. So payment made within the grace period, will it be considered as payment made within the due date? Yes. Right, now the terms and conditions of the policy stipulate that where premium is not paid within the grace period, the policy lapses, but may be revived during the lifetime of the sum life assured. Right, some insurers do not allow revival if the policy has remained in lapse condition for more than 5 years. So again, this is a candidate for MCQ. If for 5 years you did not remember about the policy ka premium to be paid, it says we don't allow the revival. Are you getting that? This is because of the possibility that arrears of premiums on such a policy would be too heavy, and it would be better to take out a fresh policy. The insurer should have taken persistent measures for monitoring the receipt of the renewal premium within the due dates. In case of most of the insurers, lapsation is tracked over the PMS. What is the PMS? The portfolio management system of the insurance company, the premium management system of the insurance company, where premium due dates are monitored by the system once initial data of the policy is entered in the system. Right? So all the points up to here are regarding the meaning. All the points up to here are regarding the meaning. And then after that, what is the next discussion we have over there is regarding the verification. So the primary objective of the audit. So now you wear your green color sunglasses. What is the primary objective of the audit? Is to check and confirm that due dates are recorded and monitored properly, and policies are marked as lapsed on non-receipt of the renewal premium. Right, are marked as lapsed due to non-receipt of the renewal premium within the due date or within the grace period. Why? Because if the payment is received within the grace period also, it will be considered as if the premium has been received on the due date. Did we underline this sentence here? Thus, a payment made within the grace period is deemed to be a payment on the due date. Then, in case of a revival request where adequate checks are in place for receipt of the outstanding amount and adequate documents were obtained before reviving the policy. Right? So, you need to write regarding policy lapse on the non-receipt of the premium, and then for revival, whether the adequate documents are obtained before reviving the policy. Whether the adequate documents have been obtained before reviving the policy. Have they already asked this question in the exams? Yes, they've asked the question regarding the policy lapse and the revival, right? You see it over here, 5 marks, May 2022. Right, so you are requested by the management to explain in clear terms about policy lapses and revival. Also state your role as an auditor in verifying the same. That means what you have to write in your answer, M also and V also. What is M? The meaning. And what you also have to write is the V. That is the verification is also required to be written in the answer. Are you all with me? Right. So free look cancellation, then policy lapse and revival. Next one is the policy surrender. That means what you apply. Yes, no talking. Right. Those of you who still want to talk, go out of the class. Go out or get out. Anything. Both options are okay. Okay, right. So now talking over here about the policy surrender, that you applied for a 15-year policy. You said, yeah, 15 years, every year I will pay the premium on time. But then after 3 years, you say, no, I don't want to pay on the premium on this policy. I want to end the policy before the end of 15 years of the policy. So what is that? You want to surrender the policy, a voluntary termination of the insurance contract. And the policy is eligible for surrender only on the completion of the 3 years. So again, an MCQ. So I've just paid the premium for 1 year and then I say I want to surrender the policy. Can you surrender the policy? No. A policy becomes eligible for surrender only after the Premium has been paid for the 3 years. On completion of the 3 years, from the commencement of the policy, provided that 3 years premium has also been paid within the due date. So what is this? This is the meaning of the policy surrender. And then you have the verification. What is the verification you have to do over here? The primary objective of the audit is to check and confirm that surrender requests are received from the policy holder only, and that adequate controls are in place to ensure for checking the proper verification process for checking the request and whether premiums are paid on a regular basis. Then what you need to check? Surrender request. Then you also need to check the surrender amount is paid only to the policy holder. So surrender request should be received from the policy holder only. Surrender amount should also be paid to the policy holder only, and it has to be paid as per the terms and conditions mentioned in the policy document. And you also need to check the appropriate accounting entries have been passed, right? You need to check the appropriate accounting entries which have been passed. Are you all listening to me? Very important discussion we are having over here regarding the life insurance company, right? All of this, it's just a matter of time. Like I told you, for forensic audit, and a forensic audit, slowly, gradually, one topic, they've started asking questions in the exam. Similarly, they could be asking the questions in the exam one by one regarding this life insurance company also. Are you all with me? Right. So have we prepared a checklist over here regarding what we need to discuss regarding life insurance company? So one, we've discussed the types of life insurance product. Then we just discussed regarding the policy lapse and revival, and right now regarding the policy surrender. Now we need to discuss regarding the premium claims, investments and the commissions of the life insurance company. Are you all with me? Right. So do you remember regarding the verification of the premium income of the general insurance company? Right, verification of the premium income of the general insurance company, IRDA Act and regulations, internal control, policy documents, cover note, policy register, advance premium, premium in arrears, reinsurance, co-insurance, GST, cancellation of premium, refund of premium. Right, these were the points for the verification of the premium income of the general insurance company. Now we need to talk about the verification of the premium income for the life insurance companies. Do you understand that? Right, that's again an RTP question, so highly awaited, like no surprise if I see a question in the exam on this one. Right, verification of premium of the life insurance company. Right, so that relative of yours, generally the auntie or sometimes even the uncle, okay, who are the LIC agent, do they do reasonably well for themselves? Do they do reasonably well for themselves? You think that, oh, LIC is also, like, not a bad source of earning of the income over there. And you saw that auntie, she has also purchased a car. And then you ask, auntie, you purchased a car, how come? So then auntie says, I'm LIC agent. No, I got lot of policies this year. I go, very good rapport building skills. I convince people that life is so precious and why you should be, doing the life insurance policy should be taken, why saving, inculcating an habit of saving is so important. And that is why I got so many policies, and out of the so many policies, purchased one car. And I purchased one car over there. So now this auntie, whenever she has to go for the premium collection, and because due dates come, she has to go for the premium collection, because policy holders are very lazy. They say, no, bana agent, you come, you collect the check and then you deposit, or we will give you the cash and you deposit over there. So now this auntie, for collecting the premium, she is going in a car. Everywhere she's roaming in a car. Why is she roaming in a car? Because collection, accounting and reconciliation. Are you understanding how this auntie is roaming everywhere? Yes, she is roaming in the car. Collection, accounting and the reconciliation. And you look over here, collection, accounting, car. You understand? No, recognition of income, regular and advance premium, reporting of the premium figure. And those of you who don't like car, you can make it car. Oh, okay. Right. Anyways, so now that is regarding the car over there. Okay. Right. Follow. Now, some or the other way, boss, you remember it. I have nothing else to tell you. Right. So will you remember the auntie? Do you have an auntie in front of your eyes? Right. Auntie is wearing specs or not wearing specs? She's wearing specs. Is she fat or is she Fat, no? Fat auntie. Huh, right, right. So you have the correct visualizations in front of you. Okay. Is she very dominating? She's like, no, no, you have to take the eco policy. And very, her presence is very much felt, wherever she goes or something like that. That auntie sitting in the car. Okay. And collecting the premium. And then what she does, she collects the premium. Then what does it say? These premiums collected are to be credited to a separate bank account, and no withdrawals are normally permitted from that account for meeting the general expenditure. Again a candidate for the MCQ, right? Again a candidate for the MCQ. Okay, generally whatever premiums are collected, they have to be deposited in a separate bank account. And right, and then from that particular policy, what does it say? From separate bank account, and then from that particular account, are the normal withdrawals permitted over there? No, the normal withdrawals are not permitted from that particular account for meeting the general expenditure. Okay, right, so again an MCQ. Then what does it say? Daily reconciliation process. So every day evening that auntie comes home by 6 o'clock, and then 6 o'clock after praying to God, evening aarti or puja she has done, then she will prepare a reconciliation. What reconciliation she will prepare? Okay, what is the amount she collected during the day? Then what is the amount when she went to the LIC office she entered into the system? And also what is the amount which has been deposited into the bank? So amounts collected, amounts entered, and amount deposited in the bank. They need to have a daily reconciliation process. Again, I am telling you very honestly and very seriously, no surprise if I see a question in the exam on this one. Big possibility, now not yet asked. Opening ceremony, anytime it can happen. है ना, the premium collection accounting and the reconciliation, right? So premium collection, what does it say? Collections have to be put in a yes, that auntie has to keep it in a, not auntie, obviously the LIC back where she has to go and deposit the money. She has to keep it in, the LIC has to keep it in a separate bank account, and no day-to-day expenditure can be incurred from that account. Then what does it say? Daily reconciliation process of how much is the cash collected, how much is the cash entered into the system, and what is the cash which is deposited with the bank. Are you understanding that? Then the accounting system employed, whether it calculates the premium amounts and the due dates correctly. Right? So generally automatic calculation happens. So the accounting system of the life insurance company. Then again, when the income should be recognized on the issued policies and not on the underwriting dates. That though we studied in general insurance company also. Now, no risk assumption without premium. When I apply for a policy, does the risk cover start? No, only when the policy documents are issued to me, only after I've paid the premium, then the risk cover or the policy starts. So what does it say? Recognition of income has to be done on the issued dates and not on the underwriting date. Underwriting date is what? When they are scanning the policy, when they are looking into the proposal of the insurance policy. Are you getting that? Right. So recognition of the income. Then there is an inbuilt mechanism in the system that all premium collected are correctly allocated, all various components of the policy. Like some component of it goes into the insurance, some component of it goes into the investment, some component of it goes into the commission paid to the agent, right? So all components of the policy, have they been properly accounted for? So recognition of income and also the correct classification of the income, correctly allocated. Then system has the capability, the accounting system, it has the capability, one, for what? Right, one, the accounting system has the capability for calculating the premium and the due date. Then second, the system has the capability to identify the regular and the advance premium. The system has the capability to identify the regular and the advance premium. Then it says there has to be a methodology of generating the MIS from the system, right? The management information systems report from the system, and there should be no manual intervention. So it should be MIS and it should not be manual, right? It should not be MIS, it should not be manual, it should be MIS. And again, there should be a reconciliation process between what? Premium income as per financials and premium income which is reported. Upstairs, which reconciliation we talked about? Daily reconciliation process for the amount collected, entered into the system and deposited in the bank. Here what reconciliation are we talking about? Premium income as per the financials and premium income as reported. Are you understanding? And then you have the other areas. What are the other areas? Other areas, you have the standard operating procedures. Then you have the delegation of of the authority. Then again, segregation of duties for recognition, premium recognition and refund of premium. So premium and refund of premium, again there is the segregation of duties, and again whether the IRDA regulations have been followed. So these are the other areas. Standard operating procedures, delegation of authority. Then again, delegation of authority, what does it say? SOD, segregation of duty. Okay, the premium recognition and refund of premium are the independent processes with adequate segregation of duties amongst the personnel. And auditors may also refer to the IRDA regulations for premium accounting. Okay, right. So what are the points which you need to write in your answer regarding the premium of the life insurance company? The car, right? And after the car, you also have an O over there, right? So what is this first C over there? The collection and the reconciliation. Then you have the accounting system. Is it clear to everyone? Right. Then after the accounting system, you have the recognition of the income, right? The recognition and the allocation of the income. Then you have the regular and the advance premium, whether the accounting system has the capability to identify the regular and the advance premium. Then reporting the premium figures to the IRDA and to the management, reporting the premium figures to the IRDA and the management. And then you have the other areas. In the other areas, what we have? Standard operating procedures, delegation of authority, segregation of duties, and the IRDA regulations, right? And the IRDA regulations. You look at this, boss, these points of premium of life insurance company have nothing to do with the points which we studied for the verification of premium of the general insurance company. Absolutely nothing, right? They are all together different points over there for the verification of the premium of the life insurance company, right? Is it clear to everyone? So yes, collection, accounting, recognition, regular and advance premium, reporting of premium figures to IRDA management, and the other areas. Okay, right? Now coming to the 8th heading over there, right? So what is the heading we have just completed right now is the premium. So now coming to the next heading over there. What is the next heading over there? The claims, right? What was the first point which I told you for claims of the general insurance company? What was the first point I told you for the claims of the general insurance company? Unsettled claims, predefined formula. You remember, incurred but not reported, or incurred but not enough reported, right? Then legally liable, right? These were the points for the claim of the general insurance company, wherein we also had the point regarding the, what you say, registers and records, claims provision and claims paid. This was for GIC. Now I am talking about the LIC. What are the points for the claims? Okay, right? What are the points for the claims? Okay, right. So now all the claims which have been made to the general insurance, to the life insurance company, first what you need to check whether the KYC norms have been completed and whether the premium on that policy has been received. So these are two basic things. And KYC norms and the premium on the policy has been received. Are you understanding? Only then the insurance company will pay the claim. Right. Then obviously you send an intimation to the company regarding the claim, and obviously the insurance company will also maintain a claim register, right? So insurance company will maintain a claim register. Are you understanding that? Okay, right. Then after that, they say, oh, there has been a death in the family and that person had a policy, and now that policy, please give us 1 crore. So they say, yes, yes, we need to pay you the 1 crore. So that it would be the processed claims. Are you understanding that? Or second, you say, oh, you're telling lie. Nobody had died in your family. So that it would be the rejected claims. Are you understanding that? Right? The processed claims and the rejected claims. Is everybody able to follow that? Right. So what are the first 3 points which we have over there? One, the policy documents, right? Then the claim register and also the KYC norms, right? And also the KYC norms, right? So premium, whether the premium has been paid on time. Then also the claim register, right? And then after that, what are the next 2 points I said? The rejected claims and the processed claims. Are you understanding this? Right. So policy documents, claim register and the KYC norms. Then you have the rejected claims and the processed processed claims. Then after that, what you need to check? Okay, whichever claims are processed, you need to check the completeness and the provisioning. Check whether all claims received are registered and entered into the system. So all are registered and entered. So you all. So that means you're checking for completeness. Then appropriate provisioning has been done for all the claims intimated but not paid. And so claims provision, so which you are yet to make the payment. Insurance company has not yet made the payment. So for that, it needs to make the provision. So one, whether all are entered. Then for those which you've not made the payment, whether you've made the provision. Then after that, it says it should include the claim settlement cost and also the maturity benefits. Like, we said, no, after 15 years, every year you give 5,000 rupees. At the end of 15 years, you get a particular sum, right? So maturity benefits, living, survival, maturity, annuity benefits ensure that the liability is automatically triggered. So if you have a 15-year policy, after 15 years, automatically the maturity benefits will trigger, and that LIC auntie, she should come in the car and give you all your maturity benefits today. Why? Because 15 years of the policy are over. Are you understanding that? So settlement cost and the maturity benefits. And last 2 points over there are the reconciliation and the reinsurance. System of regular reconciliation between, oh my God, so amazing, claim management system and the general ledger. There what we had, the premium management system, है ना? Here upstairs what did we have was the PMS, that is the premium management system. Now what are we talking about is the claim management system, right? So here we had the premium management system, the PMS, right? It was in one of the points over there, right? So the PMS, here you have the the premium management system. Now over here what are we having is the claim management system and the general ledger, and liability of claims obviously should be booked net of any reinsurance. And a net reinsurance, we always say net of any reinsurance. So if I have issued a policy, 30% I get it reinsured, so I should book the claim only to the extent of 70%, right? Because 30% I've got it reinsured. Okay, right. So these are the points which you have for the claims. Okay, now another danger area, or my analysis says that what they have done, premium collection, accounting and reconciliation, they've put in the RTP. Okay, then this investments of the life insurance company, they've put in the RTP. Claim is never put anywhere in the RTP. And what they can do, what is not in the RTP, not in the MTP, that can directly come without telling anybody that I am coming, nothing. Directly coming and sitting in the exam hall. Claims of the life insurance company. And you are remembering unsettled claims, incurred but not enough reported, and incurred but not reported claim. And then the car was purchased in Hyderabad, and then it met with an accident in Bangalore, and there is a difference in liability. There are amounts deposited with the court. Everything, you'll get a big zero over there. You know why? Because you are writing all the points for the general insurance company. You have to write down the points regarding the life insurance company. Okay, right. So one, what does it say? KYC has to be completed, premium has to be paid, and then the insurance company will maintain a claim register. After that, what does it say? Either the claim could be processed or it could be rejected. Then you need to check whether all claims have been entered, and if they've not yet been paid, whether the provisioning has been done. Then it also includes the settlement cost, and all the maturity benefits are automatically triggered, and the reconciliation and the reinsurance. Is it clear to everyone? Right? So that is regarding the claims of the life insurance company. Now coming to the investments of the life insurance company. Do you remember investments of the general insurance company? ERCV. That's what we had said over there, right? The existence, rights and obligation, custodian statement, and whether all the investments are in the name of the company, investments held at the branch, investments held by other person, right? Then the income from investments, TDS certificates, right? So that was for the verification of the investments of the general insurance company. Now they are talking about the the investments of the life insurance company, right? So what are the first 2 points which you have over there? SOD and SOP, right? Standard or the segregation of duties and the standard operating procedures, right? So review the management structure. And what are you going to review in the management structure? The segregation of duty. Do you remember our favorite word of internal check? No single person. And what did we say? No single person should handle a transaction. The arrangement of staff duties and do bookkeeping in such a way that no single person can record every a transaction and every aspect thereof. Right? So segregation of duties, and there should be the standard operating procedures. Then after that, there should be investment policy, investment committee, and investment regulations. Next 3 points. Review the insurer's investment policy, review the functioning scope and minutes of the investment committee, and compliance with all the investment regulations. So first 2 points, SOD and SOP, and then you have the investment, right? The investment policy, investment committee, and the investment regulations. Are you all able to follow this? Right? The investment regulations. Okay. Right. Then after that, it talks about the management of three things: management of the cash management system, fund-wise reconciliation, and the shareholders and policyholders fund. Right? So what does it say? Cash management system to track the funds which are available. Then fund-wise reconciliation with investment account, bank and custodian records. And there should be a split between the shareholders and the policyholders fund. So cash management system, fund-wise reconciliation, and the shareholders and the policyholders fund. Right. Then after that, there are three more points over there: disaster recovery, access control, and the custodian. Right? Disaster recovery, backup, and the contingency plan. That all of a sudden a situation like COVID comes and so many people had taken the insurance policy, they could claim the money from the insurance company. Right? So disaster recovery, that all of a sudden an epidemic or a pandemic or something like that comes up. I'm just talking in the context of, say, life insurance company. Then access control. Now access control authorization is again in relation to the, say, standard operating procedures. And it is in relation to the standard operating procedures. And then the custodian, the arrangements and reconciliation of the insurer's custodian. Who could be the custodian? NSDL or the CDSL, or if they've invested in some mutual fund, the mutual funds could be the custodian, right? NSDL or the CDSL, right? So what are the 3 points? Disaster recovery, access control, and the custodian. Then they talk about two policies over there: accounting and valuation policy, risk management policies, right? So review the investment accounting valuation policy and the risk management policy, and investment risk such as market risk, liquidity risk, and the settlement risk. Right? So accounting and valuation policy and the risk management policy. And what are the last 3 points over there? Outsourcing, NAV, and the insider trading. Right? So outsourcing, to the extent it has been outsourced, service organization, then the NAV, the net asset value computation and declaration, and any personal dealings, insider trading, or any front running, right? You know that the transactions are being done upfront, right? So front running, right? So that is regarding the investments of the life insurance company. So 1, 2, 3, 4, 5, right? Then you have 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. 16 points over there given regarding the investments of the life insurance company. Now, in the exam, if the question comes, it won't come beyond more than 4 to 5 marks, right? But this is how it has been given in the study material of the ICAI. Are you understanding that? All these questions yet to be coming in your exams. Whenever, how many ever attempts, whenever or whatever attempt you are writing, please study life insurance company forensic audit very, very properly. Right? Forensic audit, life insurance company. Why? Because these are the new areas and where questions are coming. An automated environment, they are asking a lot of questions. Okay, right? So for investments, what are the point? First set, SOD and SOP. Second set, investment policy, investment committee, and the investment regulations. Then the cash management system, fund-wise reconciliation, and the shareholder policy holder fund. Then you have the disaster recovery, access controls, and the custodian. Then the accounting and valuation policy, risk management policy, and then the outsourcing, NAV, and the insider trading. Are you understanding that? Right? So these are the points regarding the investments of the life insurance company. Right. Then we have the commission payable to the agent of the life insurance company. Had we studied about the commission payable to the agent of the general insurance company? Right? See this one: commission payable to the agent of the general insurance company, limit, solicit, blacklist. Right? You remember that over there, right? Then also the authorization, the accounting, and also the, yes, what is the agent's ledger, and then the rate entries and the outgo, commission outgo for the period, has it been duly accounted for. Now we are talking about the commission payable to the agent of the life insurance company. right? So commission payable to the agent of the general insurance company, and now talking about the commission paid to the agent of the life insurance company. So now what it says, one, for commission you need to check the calculation of the commission, right, to the eligible agents. So review the system established by the insurer with respect to the calculation of the commission to the eligible agents accurately and processing the same in a timely manner. So commission, first word which I take for commission is the calculation. Then this calculation, whatever is done, it should be processed in a timely manner. So then whatever processing is done, I want to check the completeness of the commission processing system. So commission, what I want to check of the commission, I want to check the calculation. Are you understanding that? Of the commission, what I want to check is the calculation, and after it has been calculated, what I want to check is the processing. I want to check the completeness of the processing, right? You want to check the completeness of the processing. Then after the processing has been done, you want to check the payment. So then after that, now we come to the payment, right? So the commission payment system, this is such a beautiful point over there. Commission payment system is in sync with premium collection system. So you receive the premium, you pay the commission. So commission payment system is in sync with the premium collection system, right? So commission payment system is in sync with the premium collection system, right? So once you process, then what you do the payment. After doing the processing, now what you do the payment, and that should be in sync with the premium collection system. That should be in sync with the premium collection system. Okay, right. Then what does it say? Whatever premium has been paid, it should be paid within the limit. So what you need to check? Payment. And now after payment, what do we say? It should be paid within the limit prescribed under the Insurance Act. So now payment has been done, but how much should be paid? It should be paid within the limit. And what happened? Policy came, you received the premium. That is why what you did, you paid the commission. Insurance company policy, you got a new policy, so you received the premium. That is why you gave the commission to the agent. What happened? Policy got cancelled. So whatever commission you paid to the agent, what you'll have to do? Yes, when the premium was received, we paid the commission to the agent, but now say free look cancellation, the policy got cancelled. So now whatever commission has been paid to the agent, you know, a duck, it has these hands like fingers like this, it's a clawed back. So commission on the cancelled policies, whether, so it has been paid, but later on what happened, that policy got cancelled. So what does it say? Whether the commission has been clawed back on the cancelled policies, right? Whether the commission has been clawed back on the cancelled policies, right? So that is the commission payable to the agent of the life insurance company. What are the points over there? Commission calculation. Based on the calculation, completeness of the processing. After processing, the payment, then paid within the limit. And if the policy gets cancelled, whether the commission paid has been clawed back, right? Whether the commission paid has been clawed back. Are you able to follow this over here? Right. So commission paid is within the limit. Then commission is clawed back on the cancelled policies, and the completeness of the commission processing system. Is it clear to everyone? Right. The commission of the life insurance company. Okay. And yes, commission payable to the agent. So this is an MTP question. Right, this is an MTP question over there, right? The commission payable to the agent. Okay, now what do they say in the question? You have been appointed as an auditor of Sky Insurance Company for 2021. In the course of your audit, you observed that commission paid to agents constituted a major expense in the operating expenses. Enumerate the audit concerns that address the assertions required for the auditor to ensure the continued existence of internal control as well as the fairness of the amount in the accounting of the commission paid to the agent, in the fairness of the amount of the commission paid to the agent, right? So that is what they are talking about, the commission of the life insurance company agent. And then there is this one question over there which talks about the what is your responsibility as an auditor, particularly with respect to the administrative and the expenses of the management, right? So many major expenses. What are major expenses? 5 lakh or 1% of the net premium, whichever is higher, are required to be shown separately. separately. Right? These expenses are first aggregated and then apportioned to the revenue account for each class of business on a reasonable and equitable basis. So first they are consolidated and then they are separated, apportioned for each class of the business, like fire, marine, cargo, or say for the life insurance company, the different policy. Then what should be the basis of apportionment of these expenses? Participating, non-participating, linked or non-linked business, along with the certificates that all expenses of the management, wherever incurred, directly or indirectly, read with the accounting policy, have been fully debited to the revenue account. Right? So one, what does it say? These expenses should be shown separately. Then first you aggregate, then you apportion. On what basis do you apportion? Whether it is participating, non-participating, linked or the non-linked business, right? And fully debited to the revenue account. And any expenses which are not covered under the 14 heads as mentioned in the schedule 3, right? Whatever is given in the schedule 3, then they have to be disclosed under the head of the others, right? Then they have to be disclosed under the head of the others. Okay, right? So it's just a matter of time that right now my question bank of life insurance company is just having the 7 questions. But again, astrology, I'm telling you, very soon it will become a 15 questions question bank over there regarding the life insurance company also. Okay, right? So that completes again a wonderful, again a very huge chapter over there regarding the the audit of the insurance companies, right? So we had a special focus on completing with these 2 chapters. Which 2 chapters? The audit of the banks and the audit of the insurance companies. Okay, by the way, do you remember all the chapters or audit that we've studied so far? I'll assume, I'll not hope also. Okay, engagement and the quality control standards, in which we studied the 36 standards, right? Then a chapter, I don't know what to do of that chapter, not here, not there also, little bit there in the SA 315 also, and little bit there with internal audit also, risk assessment and internal control. Then we discussed ethics, wherein we were wearing the smart hat of the umpire and we are saying out, get out, out, not out. No. So we studied the 34 clauses of the ethics. Then we come to please inform the, yo, please inform the landlord and the landlady regarding the deposits, the records, the dues, the undisclosed income, the repayments and the issue proceeds. Why? Because the fraud was done by Nidhi, who was a related party. Who found out? Internal auditor. What did she do? She entered into a non-cash transaction without registration with the RBI. Company has incurred the cash losses. Then there is resignation of the statutory auditors, material uncertainty regarding the ability to meet the liabilities. And then you have the CSR and the CFS. Okay, right. Then after that, we came to the second slot of our syllabus, which was the company accounts and the audit, section 139 to section 148 mainly, of the Companies Act. We also discussed section 123, 132 and those, right? So company accounts and audit. Then we talked about the liabilities Right. So then we came to a chapter on the liabilities of the auditor, wherein we discussed the liabilities under the Income Tax Act and the Companies Act. Companies Act, we had the civil liabilities and the criminal liabilities. Then we came to another chapter on the Audit Committee and the corporate governance, wherein we talked about the SEBI LODR. We talked about the Audit Committee, Stakeholders Relationship Committee, Risk Management Committee, and the Nomination Remuneration Committee, and a lot of other requirements of the corporate governance over there. Right. Then another chapter we completed was the audit of the CFS and a parent company and the components. Right. So permanent consolidation adjustments, current period consolidation adjustments, reporting on consolidation, and so. Right. Then after that we came to these two chapters, which is due diligence, investigations, and the forensic audit. And then the internal audit, we discussed internal controls also, and the management and the operational audit, right? So these are again like jumbo chapters over there. Oh my God, due diligence started in the morning, going on and on and on. Due diligence, investigations, and the forensic audit. Forensic audit, very upcoming area. Characteristics of forensic auditor, skills of forensic auditor, services rendered by forensic auditor, like an advocate. Like an advocate. Then which are the areas where the services of the forensic accountant are in great demand? Then the contents of the forensic audit report. Then we also talked about the process of forensic accounting, the techniques that may be used in forensic audit. You remember, T? Seriously? Better use your skills now for something better in life. Okay, right? We talked about the techniques that may be used in the forensic audit, the TBDFT, the technology based digital forensic techniques, and the data mining techniques over there, right? So that was one part of our discussion over there, right? Then after that, we came to another chapter, which was the audit under the fiscal laws, right? Wherein we discussed the 44 clauses of the Form 3CD, right? Then after that, now we've completed with these two chapters on the bank and the insurance companies, right? The bank and the insurance companies. So audit of banks, audit of. Yes, audit of the banks and the insurance companies. And then we have these four chapters over there regarding the audit of the NBFCs, the audit of the public sector undertakings, peer review and the quality review, and then also the chapter on the automated environment. Out of this also, we've already completed the peer review and the quality review, right? So now we are left with the discussion of the audit of the NBFC